Bitwise also points out that Bitcoin continues to have low correlations to stocks, bonds, commodities, and other traditional assets, and notes in the report that, quote, in this scenario, the next 10 years would represent Bitcoin's institutional epoch in which it becomes a mainstream alternative asset that is difficult for any thoughtful investor to ignore. Would you say we're already seeing big steps in that regard, especially with developments like spot crypto ETFs trading in the US and the fact that we now have a federal framework in place for stablecoins and could see some more developments for market structure on Capitol Hill?
I think that's exactly right. For most investors who haven't been paying attention to Bitcoin, it tends to be a story solely about price. And of course, Bitcoin is famous for its large price swings, both up and down. And so most people get fixated on price predictions when thinking about Bitcoin. But we believe what's equally important to investors who are building portfolios are things like correlations and volatility that you mentioned. So we do believe that the volatility of Bitcoin will continue to fall over the next decade, largely because larger and larger institutions are entering the space because you have deeper markets, which were deepened by the launch of Bitcoin ETPs last January, which are already around 200 billion in assets. And those two factors are what's going to help Bitcoin transform and what's already helped Bitcoin transform into an institutional asset from a market dynamics perspective.